Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
That's right. Welcome to the U.S. Markets Wrap. U.S. markets seesawed amid yet another tariff roller coaster ride. All three major indexes dropped after U.S. President Donald Trump doubled down on his threat to levy a new round of hefty tariffs on Canada. But by the afternoon, markets pared some losses as officials from both the U.S. and Canada said they would meet this week to de-escalate tensions and renegotiate trade policy. The S&P 500 ended the session 0.8% lower at 5572. The Dow Jones Industrial Average lost 1.1% to close at 41,433, while the Nasdaq Composite slipped 0.2% to finish at 17,436. For more insights, we're joined by Joseph Sroka, Chief Investment Officer and co-founder for NovaPoint Capital. Joseph, thanks for coming back on.
Good morning, Emaad. Great to be here.
Yeah, great to have you on as always. Now, first things first, how much tolerance really do investors have with Trump's series of disorderly trade policy moves?
Well, investors hate uncertainty. So the more things drag on, the more uncomfortable investors are going to get. As you alluded to, it seems like cooler heads are starting to prevail, that the additional tariff on steel and aluminum probably is not going to go through, and at the same time, the surcharge on electricity coming out of Ontario, Canada, into the bordering states in the United States is not going to happen because Secretary of Commerce Howard Lutnick, he's going to sit down with the Canadians for some serious trade talks, and a resolution would be fantastic.
All right. Meanwhile, commentary has been going around that points towards a recession. How soon might we see the Fed lower rates? Or alternatively, are they likely to continue taking a more cautionary approach?
Well, after we had the labor market report last Friday, the U.S. Federal Reserve Chairman Jerome Powell came out and he said he thought the economy was healthy and in good shape. And certainly, while there was uncertainties, they needed to take a wait-and-see approach. The administration has a lot going on in terms of new policies, and it's kind of hard to anticipate the economic effects of those policies. So for the March 19th meeting, the Fed's probably on hold. But what we're seeing in the futures market for the Fed funds futures in the United States is that there's probably going to be a potential cut in interest rates around mid-year. And that makes sense because at that point, a lot of what is being negotiated in trade policy and other policies by the new administration probably flush themselves out, as well as the U.S. Congress probably gets the next budget bill passed, and that gives the Fed even more clarity. Once fiscal policy is set, it's easier for them to make determinations on monetary policy.
Yeah, that's a fair point. Investors also eagerly anticipating a big data release. February's Consumer Price Index is due next week. What are you expecting there, Joseph?
I think inflation does continue to moderate. So 0.3% month-to-month increase and 2.9% year-over-year increase on prices is a fractional step down from what we saw in January. And core CPI, which is really the issue, because that's where we see, once we strip away these crazy changes in food prices like eggs and, of course, the volatility in energy prices, the cost of shelter, or what's known in the CPI as owner's equivalent rent, has really been the sticky, problematic piece for the last year or so. That's expected to be up about 0.3% month-to-month and 3.2% year-over-year. And remember, the magic number for the Federal Reserve in the U.S. is 2% annualized inflation. And that's measured in the PCE versus the CPI, but still the two are fairly correlated. So as long as we're moving in the direction of 2%, by mid-year, I think that's going to make the Federal Reserve happy and more eager to revisit interest rate cuts.
All right, let's move in a different direction for the time being, turning our attention to AI. There's been quite a bit of buzz in that space of late. Do you think, Joseph, the uptick in competition will keep NVIDIA far away from ambitious price targets by analysts?
The thing about AI is it's moving so fast. So if someone comes up and says, well, maybe we have a more cost-effective AI solution, that may be great for a few months, but all it's going to let us know is maybe AI can be even bigger and greater if we spend even more on it. I think today was an encouraging sign in the market. 5 out of the 7 Mag 7 companies were actually up today, which was a departure from what we saw on Monday. And then even the crypto market was up. So, I think, a little bit of speculative interest came back into the market today, even though it closed lower. And again, the AI names, an NVIDIA, even a Microsoft and an Apple and an Alphabet and a Meta, those are really the earnings leaders for the past several quarters. And at the end of the day, the thing to remember is despite market volatility, earnings drive stock prices over the long term. So as long as those companies are projecting, higher earnings year over year, quarter to quarter, that's what's going to drive the U.S. earnings market.
Yeah, Joseph, what's also going up is gold, which is creeping closer to that $3,000 level. Do you think the volatility we're seeing in the markets push investors to gold, which is typically seen as a safe haven asset? And are we set to see gold prices soar to $3,000 an ounce this month?
Yeah, 3,000 is not that far away. I think New York spot gold today was around $2,889 an ounce.
Right.
Certainly it doesn't take a lot to push it to the 3,000 level. And, as you alluded to, is gold a safe haven, in economic terms? Sure, it's also a safe haven in geopolitical terms. We may see some progress on the Ukraine-Russia issue. Ukraine said they'd agree to a ceasefire. We're not sure if the Russians feel the same. And, continuing efforts are being made in Israel-Gaza. So on the one hand, it may be the U.S. versus Canada economically, but we certainly have some more robust conflicts going on around the world geopolitically. And while those persist, gold's probably going to have a bid. And then, at some point when, peace and optimism hopefully breaks out again, that may make people say, I don't need that safe haven anymore.
And then they might say, all that glitters is not gold. Joseph, thanks so much for your time.
Thank you. Pleasure to be on.
Yeah, pleasure to have you on. That was Joseph Sroka, Chief Investment Officer and co-founder for NovaPoint Capital. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.